Hello everyone, I am CA Payal Kumari and today in this video I am going to discuss with you provisions of TDS under GST. Before looking into the provisions, let's first try to understand the concept of TDS under GST through an example. Suppose Road Construction Department of Government enters into a contract with Mr. X for supply of goods having contract value of Rs 3 lakhs. In this case, two parties are involved, the government entity, who is the receiver of goods, and Mr. X, who is the supplier of goods. Further, Mr. X is also registered under the GST Act as supplier and he is liable to pay output tax on his outward supplies. With the introduction of TDS, the concept of income is taxed as in when you earn was introduced, which means that the receiver of goods or service at the time of making payment for the supply has to deduct our tax, that is TDS, at a certain percentage of the value and pay it to government on behalf of the supplier. Now in our present example, the Road Construction Department has to deduct TDS, say Rs 6,000 and deposit it to government and pay the net amount of Rs 2,94,000 to X. Afterwards, when Mr. X will file his return, he is liable to pay tax on Rs 3 lakhs after taking credit of Rs 6,000 which was deposited by the deductor. From the example, it's clear that TDS is part of the GST liability of the supplier, which is deducted by the receiver of goods at the time of making payment for supply of goods, and subsequently this amount is deposited to government on supplier's behalf. The concept of TDS was introduced to minimize tax evasion and ensure tax compliances by all the contractors and subcontractors. As we all know, in Income Tax Act, every person making specified payments mentioned under the Act is required to deduct TDS. But in GST, only notified persons specified under Section 51 is required to deduct TDS on value of supply. Moving forward, let's check the sections and notifications covering this topic. First is Section 51 of the CGST Act 2017, which is the charging section. This section provides who is liable to deduct TDS, when TDS is deducted, what is the rate of TDS, etc. Then Section 20 of the IGST Act and 21 of the UTGST Act 2017. This deals with application of provisions of CGST Act in the respective acts. Then notification number 33 2017 dated 15th of September 2017. This notification notified other specified persons who are liable to deduct TDS by exercising the power given in Clause D of Section 51 of the CGST Act 2017. However, later this notification was suppressed by notification number 50 2018 dated 30th of September 2018. This notification provided effective date of application of provisions of TDS under GST, that is 1st of October 2018, and further notified persons who are required to deduct TDS under Clause D of Section 51 of the CGST Act. Lastly, we have a circular number 65/3/2018 BOR, which provided two methods of making payment to the government and also provided the basis of making payment. Now let's move to the provisions. Firstly, we'll see who is liable to deduct TDS under GST. Number one is a department or establishment of the central government or state government. Second is local authorities like panchayat, municipality, municipal corporations, etc. Fourth is government agencies. Fifth is such person or category of person as may be notified by government on the recommendation of the council. Further, by exercising the power given under Clause D of Section 51 of the CGST Act, government notified three more entities who were also required to deduct TDS under GST. Number one, any authority or board or body which has been set up by Parliament or state legislature or by a government with 51% equity owned or controlled by the government. Then society established by the central or state government or local authority, and the same is registered under the Societies Act. And lastly, public sector undertaking. So basically, from here we can conclude that above 6 types of government entities are required to deduct TDS while making payment for supply of goods or services. Rate of TDS. TDS is to be deducted at the rate of 2%, that is 1% CGST and 1% SGST, or 2% IGST directly. Next, when the liability to deduct TDS will be attracted. If the total value of supply under individual contract exceeds rupees 2,50,000, then the person would be liable to deduct TDS. Third, time of deduction, when TDS is required to be deducted. So, TDS is required to be deducted at the time of payment or credit to the supplier of taxable goods or service. At what value TDS is to be deducted? TDS is to be deducted at the amount excluding all taxes that is indicated in the invoice. Now, time limit of payment to government. So, the deductor is liable to make payment to government by 10th of the following month in form GSTR 7. For example, if Defense Department of Government deducts TDS on 20th of February 2020, then he would be liable to pay the same by 10th of March 2020. The details of TDS paid by the deductor is also available to the supplier in Part C of GSTR 2A. Further, he can file TDS or TCS receipt return to take credit of the TDS amount to his electronic cash ledger. Now comes the exception. There is one exception in which TDS is not required to be deducted, where the place of supplier and the place of supply is same, say state A, and recipient is located in different states, say state B, then it is an intra-state supply and central and state GST is required to be levied. But if TDS is deducted in state A, then it is very difficult to transfer the credit to state B. So the situation is given as an exception, hence TDS would not be levied. Hope this is clear. Let's move forward to registration. The deductor needs to get itself compulsory register under GST irrespective of any threshold amount. And the deductor can get registration without obtaining PAN. He can use the TAN issued under Income Tax Act for the purpose. Further, he is required to get itself registered even if he is registered as a supplier under GST. Next point. If the deductor fails to deduct tax or fails to pay tax to government or pays after due date, then the liability to pay interest along with the tax amount will arise. Next point, the deductor has to issue TDS certificate in form GSTR 7A to deductee within 5 days of depositing the amount to the government. Otherwise, late fee of rupees 100 per day, subject to a maximum of rupees 5,000, would be levied. Next, in case of excess or erroneous deduction of TDS, refund can be claimed under Section 54 of the Act. Now, let's quickly learn few clarifications issued by the GST Council. Number 1, TDS is not required to be deducted if the supplier is unregistered. Number 2, in case of spot purchase where the value of supply exceeds rupees 2,50,000, then TDS is required to be deducted irrespective of fact whether that contract is entered or not. Number 3, if the supplier is registered on the composition scheme, TDS is required to be deducted. Number 4, no TDS is required to be deducted if the tax invoice is issued before 1st October 2018, that is before effective date. Next, for the purpose of value of supply, in case of multiple contracts, value should be taken individually and not consolidated. Last, advance payment. On advance payment, TDS is required to be deducted where the contract value exceeds rupees 2,50,000. No TDS is required to be deducted where the deductee is liable to pay tax under reverse charge mechanism. Next point, in case of running contract where the balance payment is made after 1st October 2018, TDS is required to be deducted on such balance payment in case of stock or asset transfer between units or branch of the same company having same PAN number and different GST number. TDS is not required to be deducted. PSU to PSU supply is exempted from this provision, and the last point is no TDS is required where the payment is made in respect of cess component. That's all for today. Thank you.